Okay, so on the 9th of February this year, we found a sell setup on the crosspair pound Aussie. We can see here that we're in a downward trend, and this has been confirmed by the order of the three moving averages we use, which is the 20, the 50 and the 200. You can see here at the time of this bearish price action based setup, we had the 50 just about crossing over the 200, and we've had preceding lower highs and lower lows. So it will make a lot of sense here to simply sell the preceding rally in a downward moving trend. We also have the completion of an ABCD pattern here, and whenever we get a completion of an ABCD pattern, that would typically mean we've got a reversal. Okay, and the fact that we're in a downward trend and we've got the completion at the tip of this bearish pin bar reversal is a good confluence here. So like I mentioned, sell the rally in a downward trend. Typically what we would do in this instance, bearing in mind we've got a bearish pin bar reversal here as our signal bar, we would typically place our sell order at the break of the low, minus spread, minus an extra pip with our stop loss above the high, plus spread, plus that extra pip. However, given that we've got a difference of roughly 300 pips between our entry and our stop loss, and just shy of 300 pips between that and our first target being the previous swing low, our first take profit zone, that would mean it's a 1-to-1, which doesn't really get the blood flowing, quite frankly. That's not that great reward to risk. So we take a closer look and we can see out of the 5 preceding days to this bearish pin bar reversal, notice it's got quite a big tail to it. 4 out of the 5 days generally enters into the range up to the midpoint of this bearish pin bar reversal. So statistically we can reasonably expect, given that it was a buyer bearish pin bar reversal with the close up here, we can reasonably expect price to reach the midpoint. So instead of having our entry all the way down here and our stop loss here and a 300 pips risk essentially, what we want to do is get a tighter entry and get better reward to risk. So what we did was we placed our sell order, instead of the break of the low, we placed it at the midpoint here. This is the advanced entry we use, also known as the 50 fib. So we placed our sell order on the 50% Fibonacci, i.e. the midpoint of this bearish pin bar reversal, instead of the break of the low, which enabled us, instead of 300 pips risk, enabled us to simply halve that and get 150. So if we were triggered into this trade, it would mean that we'd make 2% as we risk 2% by the time it would have come down to the point of our original standard conservative entry down here. So instead of making 1% for every 300 pips thereafter, we'll be making 2% for every 150. So having a look here, if we ended up here, we'd made 2% at the break of what would have been our standard entry, 2%, then 4%, then 6% to our first take profit 1 zone. Okay, so that's the power of getting a tight entry with the 50 fib. And we do this every so often, certainly when we get a false breakout, the horizontal level, or indeed a trend line. So the previous swing low would be our first target, and the new lower low would be take profit 2. Whether it's this channel here, a kind of channel within a channel, or indeed if it decides to go and test the bottom side of this larger channel. So what happened after placing our orders? Well, on the next day we were triggered into the trade throughout the night, closes the doji. Then the day after, on day 2, we had a bit of heat, or took a bit of heat. We almost stopped out of this trade. There was a bit of volatility in the day, but it forced day 2 in the trade to close as a bearish pin bar reversal also, which is just what we wanted. It gave us extra evidence that this was going down, and it eventually did. We hit our first target, take profit 1 zone, on the 16th, and then it closed below it, hit the first intermediate level of trendline support, and then after buying back half the position, when it hit our take profit 1 zone, we are able to bank half the profit and leave half the trades to remain, because on one hand you want to systematically bank profits if you're in a winning position, but then on the other side of the coin you don't want to essentially exit yourself prematurely from a winning move. If you're riding a wave, you might as well ride it until the end. So we were going to anticipate price coming down to test this bigger level of trendline support here. And on day 9, after initial retracement, we did. We hit it, and we exited the position for a surefire profit of 10.2%. There was an argument to, of course, move the stop loss to this swing high here and let it go down even more, but as we're already short pound Swiss and making a rolling profit of about 25%, we thought we might as well get a quick surefire profit from pound Aussie and just simply sell the rally if we get it again. So that's how we traded pound Aussie on the daily time frame in February 2016.